I had a friend of mine who, whenever he was driving down a hill many years ago, would always turn off his engine to save fuel. And if he was saving fuel, the amount of danger and energy in order to do that, to save that small amount, is ridiculous. Is there not a counter argument that moving away from what is tried and true with the card rails and having to put all of that energy into, if you're a small online boutique store, the amount that you'll be saved may be quite minuscule compared to, say, your turnover? Is there not an argument that maybe for them it's not worth it?
It's definitely not minuscule if you're a small business. Sorry, Sam.
Yeah, I mean, let's just think about that. So I spoke to a few cab drivers before. Before they even start the journey, 40p, to Izettle, on every single ride, plus the percentage. I mean, those cab drivers, they can't wait to get rid of that 40p minimum commit. Well, I mean, you can't blame them. Most cab rides are what, £7-10? Every single one, 40p plus a percentage.
Oh, but it's 40p. I don't want to have to learn something new for 40p.
But, well, the cabbies will. I'm telling you, the black cabbies in London, they'll learn anything to save 40p. I'm telling you, they're like your friend going down the hill turning their engine off. And I think that's the thing. You need people like your friend that does that for the rest of the world to understand it is possible. So I think it's going back to the point of we need those early adopters, don't we, to embrace it. And then that will help the others. But genuinely, it's significant money that's going out the door on a value chain that did have a value in the past. So let's acknowledge it wasn't wrong at the time, but it's not right now. So we talk about the value chain, getting eroded and disrupted through through FinTechs, and that's exactly what's happening here. Is the value chain is bringing the customer closer to the merchant, the business that they're working with. So this is just delightful for the consumer and the business, a proper win-win.
This is about choice and availability of different payment methods for these organisations. It's enabling them to have a choice about actually how do I want to accept payments. What are the payment methods available to me, and that's obviously both from a retailer perspective or from a consumer perspective. So it's about having that choice that allows them, to understand actually what's the best option and solution for me.
The fact is that if we're able to give the customer a much better experience and UX in terms of approving their payment, more of them are likely to spend, more of them are likely to do it on a mobile because, there's a massive drop off on mobile. More of them are likely to continue the payment because there's two-factor auth involved. The upside is there. Explaining that, I guess, a challenge. But when you bundle that up with a cost, it's huge. Businesses care about three key things. They care about reach, so getting to as many consumers as possible, so giving them the choice and options. Care about conversion, so how many of those customers are actually going to make it through and give me their money. And then the cost of ownership. And open banking ticks all those three boxes.
The global airline industry consumes every year, pre-pandemic, $8 billion on interchange. So if you didn't have all of that, $8 billion would be just saved. And this is all of these 40p's and £1 and few pounds getting added up. So that's a huge amount of money we're talking about.